Hello and welcome to this live weekly market overview here presented to you by Forex Academy. My name is Robert Blackwell, of course, and during the course of this webinar, we'll be looking at the technical analysis and particularly focusing on the Forex markets with the activity during the course of the week. Now, there is, of course, financial risk inherent when trading the financial markets, so do have a quick look and familiarize yourself with the following disclaimer there. And let's begin then just with a few pieces of housekeeping. And I do bear patience. Thank you so much for sticking with me there for a few minutes. I was having a few technical issues with my microphone, but all is good now. So we'll continue with today's lesson. Again, it is, of course, a live interactive webinar, so feel free to ask questions as we approach the end of this week. If you're positioning for some of your trades for the week ahead, it is a very interactive webinar. We'll see strength and weakness across the Forex markets, debating how the news flow affected the markets this week and what we can assess in terms of long-term views for particular asset classes. Of course, you can locate the chat box there on the right-hand side of your screen, so do not hesitate to ask any questions throughout. And of course, we record the live webinar and place it into your members login area for revision, so you'll have that roughly within a 1 hour period after today's lesson. And of course, we have a Q&A session towards the end of the webinar that I can specifically take some time and deal with your issues. If you'd like to discuss or look at any charts, we look, of course, at observing different time frames with this lesson in particular. So if you'd like to zoom in, perhaps on a 4-hour technical analysis of any chart that we look at throughout the course of today, we can certainly do that. So maybe take some notes, and of course, you can ask me some questions towards the end. So in this webinar, of course, what we aim to do is assess the key news events and themes of the week. We look then to assess volatility in the Forex markets and take advantage of multi-time frame analysis. So again, because it's the very end of the week here, Friday, the 27th of April, we're looking to assess what's happened through the course of the week. We can assess how the market sentiment is at that stage. So whether it's risk on or risk off in its approach to risk association, we often see the US dollar or the Japanese yen see some sort of capital movement there when the risk shifts in terms of market sentiment. And of course, we like to discuss just general opportunity for short-term traders in the Forex markets entirely. We'll review the charts then over the last 5 days, and first we'll start then with the news flow. So what themes dominated the main markets this week that we like to look at? So here are some of the main topics that really affected asset classes this week. So the first I would like to start with, because it's particularly interesting for Forex traders, even though it isn't a Forex market, is of course the main story this week considering debt. The debt markets are otherwise known as the bond markets. So in the US, we have the treasury markets, and finally we see the 10-year yield on US debt reach a level of 3%. Okay, so what exactly does that mean? Well, it means that if you invest in US government debt over the duration of 10-year period, so you purchase a 10-year bond, then you're going to effectively receive a 3% coupon at an annual rate. So that is quite good in terms of debt structure. What we view bond markets to be, just to give you some background, is effectively a riskless free asset in terms of its backing by the US government in this instance. Of course, the US government are very likely to pay back their debt upon purchase, as opposed to perhaps more riskier debt like corporate debt. So it's been quite some time that the US debt level in terms of 10-year bonds are reflecting 3% yields. That's fantastic for income traders, of course. If we relate that to perhaps the German bond now, we're seeing just in around a 2% yield, so not really outperforming the debt market. So it's very significant. And to speak about Forex trading, what does this create? Well, it creates, of course, demand for US denominated assets. So let's say I'm a trader and I want to purchase a 10-year bond. That effectively is priced at a principal value of $100,000. So there's my capital coming from Europe into the US Federal Reserve there, the government, to purchase that one bond. So you can see how this attractive rate of interest at 3% yield level has actually increased demand for the US dollar. And that is effectively what we've seen across the Forex markets this week. The main story is dollar strength, and we'll look at that in much more detail. Okay, again, so we have some more news flow. Macron, there, the French Prime Minister there, Trump, will pull out of Iran nuclear deal, and that's certainly what we've seen in terms of the rhetoric disgraced. We know that they're very much, I suppose, friendly towards one another, Trump and Macron, and effectively that's what we've seen then in terms of the news flow, where Donald Trump was quite ostensive in terms of his dealings with Iran. But we've seen that rhetoric start to settle as French politics start to come into play. So hopefully that level of confusion that was felt in the oil markets and the equity markets start to lax a little over the week ahead. Another main story this week, and of course in terms of economic data, was the ECB press conference there yesterday. What we specifically seen was the bid rate, the main interest rate offered by the European Central Bank, again, which filters through the European economy, was held at constant 0.0 rate. So effectively not providing any return there. No big change or no big shock to the markets, but what was significant was the press conference itself. And the title we have here, How Worried is Mario Draghi? Simply referring to the fact that he did not discuss any discussion there, I suppose, any rhetoric on quantitative easing. What he did discuss then is the fact that we see inflation rates subdued. We see that monetary stimulus is going to continue, and we have not seen any, I suppose, discussion or a date to signal to the markets when we are like to retract from some European monetary stimulus. So that is potentially becoming a factor as deflation is continuing across the Eurozone. How do we as monetary policy analysts start to analyze that data? And the rhetoric, of course. And again, some news flow just from this morning. Two Koreas agreed to end war this year and pursue denuclearization. So I thought I'd just put that in as a caption, because we have seen over the last 2 months the rhetoric between the US and Korea in terms of, obviously conflict, and how that is starting to lead into the more increasing discussions of Western sanctions across the East there. So this is, of course, a good news story, evidently, as we see this news just come in today, and hopefully will be supportive of equity markets in particular. Let's move on then to discuss our Forex activity matrix. And of course, we can delve straight into it here. So what have we seen in the Forex markets this week? Well, two stories that are really sticking out like a sore thumb here. We have the US dollar strength. So what we've seen in particular is the US dollar strength across all majors. And that very, very rarely happens, where we see strength across all major assets, strength or weakness. Effectively, that's what we've seen in the dollar. So to give us some confirmation here as we look across dollar assets, again, what is supportive of this, just pre-mentioned there, was the effective news flow, evidently, of the US Treasury yields reaching 3% and a huge influx, a likely influx of US dollar capital coming back into dollar flows there. So again, if we look across the euro, we have a 2-star, we have 3-star against sterling, again showing some sterling weakness against dollar strength. New Zealand dollar is very weak this week as well, so we see that flow in. And again, some points here with relative strength against the South African rand and the Swiss franc. So very, very strong dollar this week. Again, if we're looking towards our dollar index, we've seen a bounce from the low and a technical break above previous levels. Very supportive on the technical side of the US dollar. So generally, when we see a very strong move like this, we can suggest that it's likely to continue for the week ahead, because this is the only first primary week that we've seen relative strength in the US dollar, given its weakness throughout 2017. So very significant trading. I'd just like to reiterate, a very significant dollar strength this week as we look across the Forex pairs. Then the second, I suppose, real focus on Forex markets this week is effectively our New Zealand dollar weakness. Just right here, we see the fact that we have a significant level of weakness across the dollar. Considerable weakness again against the Swiss franc. So we've seen the Swiss franc again show some sort of ambivalence towards strength. If we look at the US dollar Swiss franc, it is relatively weak against the dollar with the dollar strength. So that would be assertive for us in terms of trading. But again, the big flow in terms of these markets is the New Zealand dollar here against the Swiss franc, 3.24% to the good for Swiss franc or adversely New Zealand dollar weakness. So we're seeing some very, very strong moves. It's very, very infrequently that we get some of these Forex data that we produce on a weekly basis, of course, here at Forex.Academy above 3%. We are now seeing New Zealand Swiss franc at 3.24%. And of course, big moves in US dollar denominated assets there, more particularly sterling. We've seen a very strong move in sterling and South African rand. So hopefully we can get some continuation trades for the week ahead. Again, just to go through some of the markets here in particular, we've seen oil markets have sort of positioned themselves in a trading range for a particular period of time. We see perhaps 7 days of price consolidation. We've seen no real consistency in terms of dollar or Canadian strength as a result of the loonie pullback again last week. And again, hopes of this North American free trade agreement to revamp oil markets again for bullish story is certainly not the case. That rhetoric has been pulled back. The big story for me is, of course, the Bank of Canada. They're lagging in the Fed in terms of its tightening cycle, and again choosing to leave the rates on hold at 1.25%. Again, the story from last week flooding and continuing into the markets this week. So with the Canadian dollar, we've seen a level of ambiguity there in terms of the strength or weakness across that assets, and reflective again just of price consolidation in the commodity currency. Again, to the Japanese yen, we've seen a level of strength supportive just with the volatility settling, however, still very much there in the equity markets. Again, as we look across the US dollar, of course, we still see a relative strength with the US dollar in terms of Japanese yen trade flows, and that's certainly the case here with overbearing strength on the dollar towards the yen. So effectively a negative number there for the yen. And again, a bit of I suppose ambivalence in terms of Australian dollar, and really not something I've been trading this week. We've just seen it sort of flatten across all the currency pairs there for the week. Not really giving us anything significant apart from the dollar move there at minus 1.31. So just something to note, if that can be a possible lagging market for dollar strength, we might certainly look to jump on that next week, or perhaps position for it today, given the fact we've seen, of course, a close currency, a neighbor currency with the New Zealand dollar, show us that real level of weakness against the US dollar there at 1.99. So very significant moves in the currency markets this week, and again, great trading opportunities. So just before we deliver some debate on the technical charts, let us discuss one of the advantages to our weekly market overview, and that is, of course, multi-time frame analysis. Why do we do it? Of course, when in observing the markets in many different time frames, we can achieve better sentiment analysis to market direction over the long term. This will help us deliver a consensus on the bigger picture for each of the individual trades. Okay, so for each of the individual trades, of course, we can gather a sense. If we look at perhaps a bullish move on a daily candlestick in the US dollar, well, when is the best time to perhaps enter that market? Perhaps we can enter on a pullback on a 4-hour candlestick. So it's all inclusive for these markets to look for the best opportunities to enter. Particularly for Forex markets where we attempt to trade strength versus weakness, the long-term price view will aid us in our directional bias and trading in the short term. Okay. And certainly, as technical analysts suggest, technical levels of support and resistance, they hold more weight and are better established over long time periods. So I hope that makes perfect sense. Of course, what I'll just reiterate is to give you but an example. So let us say we look to trade with genuine levels of support and resistance. That is our main frame to look to use early technical analysis. Well, of course, if we have a very consistent level of support holding a market up as a floor while observing daily candlesticks, that is technically very significant. However, if we see a chart and we simply zoom in to that technical chart and we see, well, there's no real structure holding up the daily candlesticks, but when we zoom into perhaps 10-minute or 15-minute price action and we can see a level of support and resistance, well, we can certainly use it, but it doesn't hold as much weight as the long-term level of support in the market. So that's very, very unique in terms of trading those two separate trades completely separate, particular to the time frames, of course. The best trading opportunities, of course, arise when you see both. So you're looking at a price chart, you see a level of support and resistance there as a floor in the market. It is subject to the daily price action and perhaps smaller time frames of 4 hours or 1 hour that you're looking to trade as well. So that will hold more weight or context in terms of the trade. So let's move into observing the charts, and we'll debate some of the best trades we've seen, of course, and some of the biggest moves we've seen, of course, with the volatility in the Forex markets this week. So here we have, of course, our JFX trading demo platform, just to go through some of the markets here. Again, we'll start with euro dollar, a very, very popular market to trade. What we've seen, again, just to reiterate, is this level of breakdown. Okay, so a very, very significant level because the long-term support and resistance level has effectively broken down. Why is it as significant? Just to suggest this, apart from the obvious observation of the price action here, well, it's effectively at this level here where we see prices break down. It is significant because the last time it broke through these prices was effectively the entire up move. This up move here, and dated in and around sort of the first week of January, or maybe the 10th of January there, just at that date. So effectively, what we have seen is the market trade within this trading range for such a long period of time. We can see it consistently trading horizontal and not giving us any real inclination apart from this descending triangle to squeeze lower. We need to wait for the confirmation, and that is exactly what we get here at C. This confirmation that the market is looking to trade down. As we consulted there, the Forex activity matrix, we know that the overriding story is dollar strength this week, and that's effectively what we are seeing in this market. Again, what we're trading here is euro US dollar, so when this market is trading up, we see euro stronger than dollar, and vice versa, which effectively the position we're at now, we see dollar strength over euro strength, or vice versa, we see, of course, some euro weakness. The story is, of course, dollar strength on the fundamental side. We see the technical break here, so very, very significantly technical. And in terms of price speculation, guys, there's a lot of room for this market to go. There's nothing holding this market up now. We have a little top here, but again, it's only 4 days of price action. We're almost at that level. So again, we see great profit in and around these areas. So some very serious movement in the euro dollar. Again, I would not be advising anyone to buy this market at this particular stage. Let's move on to cable. And again, we see all of these markets in terms of relation to the US dollar at a severe inflection point. What I want to zoom out, and if you can just bear with me because the price action is quite tight here, I just simply want to place this long-term level right here. Very, very significant, okay? Because if we zoom in on the price action, we can see how constructive the level has in terms of trading. And now we're at this inflection point where we, of course, have just broken a long-term inflection level in this market. Again, if we were to choose a series of lower lows, we've actually traded within the bands, but we didn't see any significant price action here, apart from, sideways price action within our area of non-confirmation, I would call. What we've actually seen is a close currently just below this. So technically on that level, it would suggest that effectively this whole trend has now become invalid, and we're starting to see this shift to the downside. You can see it's quite a significant move from high to low. It trades straight through to new lows again. So we've seen sterling see quite some weakness there towards the end of last week. I do believe that was the topic of conversation on last week's live weekly overview, given Mark Carney's, I suppose, forward guidance or anticipation to holding off on interest rate increases, something that was very much priced into the market by May. That's not the case. We've seen sterling sell off quite strongly. And again, we didn't anticipate dollar strength to be an overriding factor in the markets this week. That is certainly what we've seen. So we're kind of at a very interesting point here in the cable market. Again, to zoom out, where do we expect this market to go? Well, on the technical side, that's at a real inflection point. So if we see continuation, either with Monday's candlestick, that would suggest to me that we have a lot of room for this market to trade to the downside, and these are the type of long-term opportunities we will of course always be looking to focus on, simply on the technical side, not just to ignore the fundamentals of course, because they're all stacking up, but there's a lot of room for this market to come back to medium price here, in and around a long-term level. So some serious opportunity there. And as we look across some of these pairs this week, guys, considering dollar strength is the story, that is leading us to believe that a lot of these technical support levels have effectively broken down. Again, what you can look to do is observe different markets. So to choose one, perhaps a good one to choose is the New Zealand dollar here. Now this is the weekly candlestick structure. Again, I'll observe this in just a moment. But what you can do when trading strength versus weakness, of course, is to look for the best technical setup. And this is certainly it. Again, does that look familiar to you? Of course, it is very similar to the euro setup. We have the long-term trade to the upside for the remainder, I suppose, of the last 6 months to 2017. We see the level of support long-term. We see the rejections again. Let us move on and consult the New Zealand dollar against the US dollar. Something very, very interesting indeed. Very similar. Again, we see a trading range for quite a long period of time. What that resembles to us is maturity. So we see this range start to mature. Again, we see quite a few inflection points, again, rejecting highs and lows several times. But again, this is the breakout trade. We've certainly looked to sell this market at this price here, in and around these breaks. And that gives us a lot of room to the downside to look to follow this momentum. Again, this is very significant on the fundamental side, because this represents to us not only dollar strength, but New Zealand dollar weakness. And that is, of course, the momentum trade for the week. We know that many of our traders have been making this trade. So here we have our real, I suppose, the last time the market has consolidated. So my question is really, are we likely to get a period where the market continually pushes down to this level before it settles? If that's the case, we still have quite a bit to go there. We're at 70.5 to in and around 68.5, so another 200 ticks to go, or pips to go there on this trade, if that's the technical case. So some really, really interesting opportunities there, trying to follow this dollar strength. And of course, New Zealand dollar weakness is the news story for the week. And we can see that as well, a bit of uncertainty against the euro here. As we look across the daily candlesticks, it shows us that uncertainty today, with the bearish spinning top just right here. So that's today's price action. What I would suggest is just to forgive and ignore that for now. We'll zoom in on the weekly analysis, because we've seen this level consolidate for quite a period of time. So this is our euro Canadian dollar. Oh, sorry, this is our euro New Zealand dollar. What is significant for us here is nothing in terms of price action structure. This would be a clear rejection. But again, all of this price action is just sideways trading until we get a full-bodied candle to the upside within the full context of that range. And then we get the technical break to the upside, albeit we see a pullback in the weekly candlestick structure right to these levels. So I would agree there's a level of uncertainty there. However, it is the first time, if the market closes in and around or above this level, that we have closed yet again above our long-term technical support level, and that would lead us to believe that this short-term pullback is only short-lived. And if we see more New Zealand dollar weakness, then this market's going to shoot up to the upside. So something very significant, again, just to look at the different time frames, because that is certainly a difficult trade to trade there on the daily candlestick structure. I suppose one way you could forego or allow this opportunity to get long is simply by understanding the market has moved up quite consistently in that short period of time. Very, very consistent bounce from these lows in the daily price action. And this can often happen if we don't get a direct breakthrough to the upside. We see the market just slightly roll over. And again, if it's simply a rollover trade, it will likely fluctuate around this level before taking off to the upside. So that is allowing us effectively, if we're looking to follow the trend, the perfect entry close to our level of support resistance, so we can actually trade the support level itself. So just be aware of the price action with today and maybe Monday as well. If we see this market start to trade up on Monday, that would be more assertive to looking to judge and speculate on the long-term move. And again, let me just zoom in on the weekly analysis. We've effectively broken the level and are looking to breach new highs. So long may that continue. Let's move on then to another asset we've seen, US dollar, Canadian dollar. And if you do remember, guys, we consulted this trade last week. So the discussion there was purely on the technical Fibonacci retracement. Again, what I discussed is the oil market is starting to settle, but where is it settling at? It was not settling, of course, at $50 per barrel. We see a WTI crude oil settling around the $68 to $70 mark, so very, very significant in terms of higher oil prices and being very supportive of Canadian dollar moves. Excuse me, but we've seen a very strong bounce in the US dollar when the US dollar was weak. And this was the only market that was trading up when dollar was weak there throughout the remaining 3 months of 2017. Then we've seen a pullback. And again, we use our Fibonacci retracement just to suggest these different ideas. So what I'm going to do is just include the two Fibonacci retracements to give you an overall conceptual idea to this market and how it's reacting. Okay, so what I'm going to do is effectively place our Fibonacci retracement again, which we did last week, from swing high to swing low, right up to our level. I'm just going to change the color so we can have a look at this, guys. I'll change it to perhaps, let me see something. There's a blue, a navy. So again, if we can just zoom in and actually look to trade this here, what we looked to trade was the fact that we see the long-term move to the upside here in the US dollar against the Canadian dollar, touching these highs, swing low to swing high. Then our retracement, again, we discussed the best trading opportunity, which is our 61.8 retracement level. So in terms of trading these Fibonacci indicators, what we observe is, well, effectively it's a retracement. It's a Fibonacci retracement, which means this market is only going to pull back. It's not a full trend reversal. Now, if that's the case, the best risk reward trade is, of course, the very penultimate level of 61.8, because the market has witnessed a full pullback to the best level. If that's not the case and it's a full trend reversal, if the market breaks these lows at the level and continues to trade to the downside, well, the Fibonacci signal becomes invalid. So if you remember from last week, we discussed that trade. So effectively, we looked to discuss that and made the trade to the upside. That's effectively what we got in terms of price consolidation. We've seen some ambivalent trading there, and then we got this candle here, which is a big, I suppose, tick for us in terms of showing a bounce from our level. This is effectively where we're at on the long-term Fibonacci from this swing high to swing low. Again, we've seen the market trade up, and what we've seen again from our new swing high to our relative swing low with the new Fibonacci there is effectively touching our 61.8 retracement. So that would suggest to us on a technical level that this is the best place to take profit, because we might see this look to reverse. Now, of course, the market is quite strong and is shifting, albeit uncertainly, to the upside. But again, just on a purely technical basis, we've really got this trade correct in terms of the overall analysis. And, in terms of where we're at today, airing some caution to the new Fibonacci retracement level. What I'll do is just delete our previous Fibonacci there so we can have a better context of this. So we have the new swing high to swing low, again, trading back up to 61.8. And if we see this start to roll over, as the US dollar settles, then the trade would try and be to follow this down. Maybe if we see US dollar strength, enter the markets again across the assets, if we look to break these highs again, we might actually get trading up to the 100% retracement level to full trend. So that's most certainly a technical trade, of course. With the markets again, just on the fundamental side, we see dollar strength, we see ambiguity across the loonie there, the Canadian dollar. So that would suggest just on the fundamental side that we may look for dollar strength to continue. But again, always judge the price action to give you the technical inclination. So very, very interesting movement there, and very adherent to the Fibonacci retracement over the long term in the US dollar, Canadian dollar. Let's move on then to the Euro Australian dollar. What we've seen here is our long-term price channel. And again, we're just sort of bouncing off these new highs. So these new highs as well are just rejecting, but we're still within the integrity of our price channel to the upside. So really interesting to watch this market trade. Of course, we've been looking at it for a long period of time. In terms of how these two assets are trading, if we consult again and remember just the Forex activity matrix, there was nothing too significant in terms of strength or weakness for the euro, or nothing too significant in terms of strength or weakness for the Australian dollar this week. So we're just starting to see those currencies settle themselves, and of course their currency pair is reflective, of course, a little limited volatility. If we just zoom in on the weekly candlestick structure again here, you can see it's just trading within our level of support. Oh, I'll zoom in. Our long-term sort of price range that we have at the moment. So nothing too crazy here in terms of how this market is trading. It's rejecting these highs yet again. Of course, on the purely price action objectivity here, we would say that this is not the best of buy trades at the moment. But again, if we're looking to sell the market, we have a very limited amount of profit until we get to this level here, because it's a support level and it's our ascending channel level. So again, it kind of reminds me of the sterling dollar trade, which we've actually seen to break that level. So if you're a technical analyst and you're looking to trade on that basis, then perhaps given the fundamental situation with, of course, the dollar strength, then this is the trade for you. Okay, but very interesting to watch for the week ahead. I would suggest, of course, to watch to see if price does start to shift. Again, what we need is I would argue, some euro weakness, particularly because we've seen New Zealand dollar weakness this week. But what we haven't seen is Australian dollar weakness, and these two commodity currencies, they're not correlated now, but they do share a level of relativity to the commodity markets. But we haven't seen any movement there in Australian dollar this week, so perhaps we're not going to see any strength given the New Zealand weakness. And maybe for this market to shift, we may need some euro weakness to actually bring the market beyond this point. So very interesting when we look at the daily candlesticks. Again, something that's quite fascinating is, of course, this rollover in sterling. So if we look again at the cable market or sterling dollar, again, I'd like to note that this trade, or the reason I would say 90% of this move is, of course, this week dollar strength. But nevertheless, we're seeing a real inflection point here, or a break from this long-term level in the cable pound dollar market. It looks very similar to what we see across the sterling when we consider the Japanese yen. Now, what I'd like to note, again, just the fact, if anyone's following the equity markets this week, we're seeing Monday, Tuesday, Wednesday, we've seen a sell-off from highs in the US equity markets, retracing almost 40% of their prior move to the upside from the week before. And then yesterday and today, we've seen a bounce from the lows, quite a strong bounce. So that volatility is still there, but in terms of the price range, we're not making new lows in equity markets. We're seeing stability in terms of investors coming back into the market. So that's good for equity markets particularly. And what that means for Japanese yen is we're starting to see an unwinding of the previous trade there, particularly with the pound again. In terms of the technical side, we have seen this channel break to the downside. So very, very technical on the daily price action. Again, this is our level of support here, and this is effectively the ascending channel to the upside. So we're just right at this inflection point now with this price today. So we've seen a very, very structured break to the downside. That would let me, that would, I suppose, give me more evidence to suggest that sterling is itself quite weak. Never mind dollar strength. We see sterling trade, and again, as a follow-through trade with Mark Carney's suggestions that we're not going to see interest rates increase in the short to medium term there in the UK. So that would certainly suggest, look, this is stacking up for us on the technical side. It's starting to trade to the downside. Yen as well is not experiencing anything too significant, but we're seeing it just start to roll over. So let's just take off our analysis here. What I'll do is just bring in the weekly time frames to actually see how significant the break is. So there you go. If we look at the weekly candlestick, as a pure price action specialist, what does this tell you over the long term? Okay, well, here is effectively quite a nice trade to the downside. Now, again, if you're looking to trade this market and you're in a period of this, sorry, if you're in this market for potentially 1 month, so say 4 weeks of price action, I'm selling from these highs. That is with a bit of volatility, you're getting a very, very big move in a 1 month period. So that's, effectively the sort of opportunity in selling this market, I would suggest, if it's applicable. Again, over the long-term structure, what's significant to me, if we can just concentrate on this for a moment, is that the story really over, I suppose, the last 15 months was that sterling was seeing a lot of strength, but it didn't actually break new highs like it did in this market here. So if we just consult let me just zoom back and we'll consult our pound US dollar market. Effectively, the new highs were just leveled off with this strength here and just pipped, the new highs, and then we've seen the sell-off relatively very recently. Okay. However, that is not the story in the pound yen, because these new highs here, again, we're looking at the weekly price action. If we zoom in, it's quite some time ago. So the fact that we're still at quite a lower level compared to pound dollar is significant to us, because it tells us that we've got a period of lower lows rejecting new highs, and that we could see something like this again. So depending on the term of the trade, of course, there's a lot of opportunity in this trade, I would argue, on the technical side. If we observe the candlestick structure, well, it's effectively the most, I suppose, one of the most bearish candlestick signals that we can get. It's our rejection candle to the upside here. And again, look at the price action reject any buyers come into this market, effectively closing at new lows and closing below our ascending channel line. So again, there could be potential movement for this to trade to the downside. And again, the fundamentals are stacking up with this. There is no interest rate increase being priced into sterling at the moment. So again, this is something that we can look to follow purely on the weekly candlestick, ignoring perhaps all volatility, and again, just look to trade the weekly price structure in this. Just out of observation here, what I'd like to do is zoom in on the price action, and what you can see. I'll just zoom out on this as well. This is the 4-hour price action here, and you can see something has happened in terms of news flow or sentiment driven news, particularly in the last sort of 8 hours of trading. If we just ignore this current candlestick, in the last 8 hours of trading overnight there, we've seen a big move in this market. So that would lead me to believe that there is something going on here in the Japanese yen. Okay, so we can't just ignore this, guys. We can't just factor in the fact that this may be a sterling move, that we are, just simply saying, well, sterling is weak at the moment because Mark Carney has suggested. No, we have seen a move overnight in the Japanese yen in this market, given Asian trading has pushed this in the last 8 hours by observing the 2 4-hour candlesticks here. So technically significant, and again, something might be going on in the yen market there as this trend, overall trend structure and the integrity of the price channel has broken to the downside. So that's just some food for thought in terms of trading this markets as you build it into your analysis. Again, we can literally see it break through with the 1 hour price action quite consistently through our level. And again, that leads us to believe that something is going on with this markets. Where might this market end up? As we see, relative price structure there, I believe a few months ago, is a very good question indeed. So let's just have a look at this trade just over the longer term. That's effectively the potential opportunity that may be available from these price structures, guys. Okay, so just be aware of this as we come into, well, if you're trading today, of course, or if we come into Monday's trading, that we're at an inflection point with sterling yen. So very, very interesting market to trade at the moment. Let's move on then. What I'd like to just discuss is the New Zealand Japanese yen. Just because it seems to be trending more, I suppose, it's giving us a nicety trade where it's not showing too much volatility in the daily candlesticks. It's just trading down nicely. So it may suit some traders who do like to follow momentum, but again, like to try and avoid volatility. So I wanted to just pick it up with you guys. Again, we see a consistent level of rejection from around our 79 level. And again, if we look at the daily structure, we see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11, if you forego one of these, of course, because we have 2 hours of price action on Sunday night, we have 10 consistent bearish candles in our New Zealand Japanese yen. So that tells us that, of course, New Zealand dollar is weak, and potentially we're seeing some Japanese strength come into the market here across with the asset, the New Zealand dollar. So again, something just to note in terms of those plot and dot traders who like technical analysis like this. Again, that you can literally trade this market to the downside. In terms of your own risk management, I know it is an effective tool. Some traders like to mitigate risk as soon as possible with these forex markets given the volatility. So how might you do this? Well, again, we see the rejection. We simply move our stop loss above the last corrective high. And as you can see, we actually hold this trade the whole way down. So perhaps this trade is just the one, but again, it's closing in around the same level, but very, very consistent sort of marker to look for downward price action in this trade and avoid volatility. Okay, so depending on the style of trader you are, if you're just simply looking to trade the markets day by day, this is of course a very opportunistic trade and trend starting to formulate in the markets. Let's just zoom in on the weekly price action, and again, we don't simply, if we're not observing or having an idea of a total, breakout trade in this market, considering how the markets are trading at the moment, we have seen rejection of this level. All we're simply looking perhaps is for the market to trade to new lows. So perhaps come Monday morning, if you were to sell the low of this candlestick here and place your stop loss in and around this level, just, at the high of the previous week's price action, it is very unlikely, unless the sentiment shifts in the market, that the market will trade up to the upside and get your stop loss out. But again, continuing down, you might just get what looks to be just over a 1-to-1 risk reward on the trade, which is absolutely fine if the probability would state that, of course, you have a higher probability of 50% for this trade. So that's just something to think about over a weekly time structure. And again, as we zoom in on the closer analysis, you can see with the 4-hour price action again, I mean, it's very, very consistent, isn't it, guys? It's very, very consistent. There's no real volatility telling us that there's going to be some sort of move to the upside within any of this price structure. So something very, very easy to trade, I would argue, if you're looking at this market in time. So let's just see how this opens on Monday, Sunday night, and Monday's price action overnight, of course, and see if we can try and get on the trade in this market. And then we have Euro New Zealand dollar again. It's just at this inflection point where the market's trading up, trading down. It's nothing in terms of the daily price action. It's just showing us that little doji candle now, which gives us some indecision to where the market actually wants to end up. But again, we just discussed the fact that it's broken this. I wanted to leave you with this thought that it's actually broken the long-term level here, above the weekly price action. So something significant in terms of trading this markets. So what I'd like to do then is just to zoom across some other Forex markets in particular and just focus on the weekly price action related to the US dollar. Simply put, I'd like to just focus on this for the last 15 minutes of this lesson because it is the last time we've seen a real shift in the Forex markets, potential shift, I should say, in the Forex markets over the long term. So again, I'm just going to drag across plenty of these US assets just to really focus in on these moves. Here we have a US dollar strength versus the Swiss franc, of course, and it's just trading so strong at the moment. So, whether your analysis, your fundamental thoughts, I do know SNB, the Swiss National Bank's Jordan is speaking at 7 p.m. tonight. Just be aware of that. But this is, of course, a very well structured trend because it doesn't show any sign of pulling back. Again, a completely different asset to the New Zealand dollar against the yen there. But again, something similar that you're just literally able to trade this to the upside. And when you do break these support levels again, you can see just a continued shift at these markets. Again, today's price action is actually quite subdued. So that is providing us with a signal that it's a quiet enough Friday indeed. Actually, I was just seeing the economic news flow and we have some interesting news from the US, but nothing too significant in terms of like non-farm payrolls or unemployment data or anything on the economic data front. So what we're actually seeing across these US assets, again, just to refer to the Forex activity matrix, is strength across many of these markets. So again, let's just zoom in on a weekly price action again and just discuss this. So here we have the US dollar. We've seen quite a large pip move in the US dollar, Japanese yen this week. The Canadian dollar, again, the US dollar, Canadian dollar, we've seen quite a large move this week to the upside. Again, with the New Zealand US dollar, very, very significant technical break. Just look at the size of this candlestick in comparison to the overall price action, certainly over the last year. You could argue the last time we seen the ATR, the average true range of a candlestick just with this size, you could argue would have been this candle here. Why is that technically significant for us? Well, because that was the start of this trend to the upside to our new level here. Okay, so now that we've seen a break again to the downside, you could argue that is the start of something new in this market. Okay, so again, very, very technically significant by judging the weekly candlestick there. The Australian US dollar again showing some weakness. Again, this is relative of dollar strength. Just pushing all these markets in one particular way or another. And as we move across, let's just choose something a little more exotic to discuss. The US dollar. I wanted to have a look at the US dollar ZAR. There is the South African rand. Quite an interesting point just to I suppose, pick an inflection point here with this market because it's starting to trend up. It is starting to trend up on the daily analysis here. But with a lot of the political uncertainty there, I suppose January and 2017 there of this year, we've seen big moves in the South African rand. Now, the market seems to have settled here. And if you just zoom out on the price action here, you can see that's just starting to tick up nicely. Okay, so we've bounced from these lows. We've actually broken a support level this week to the upside in one particular day. So I do believe that was Monday's price action. So that's technically significant for us. And we're not really seeing anything too consistent in terms of a full rollover to our level here for upside potential. So again, because we've broken these levels, it might be a more observed trend to the upside if we just zoom out and really collect our thoughts with this market, because we've seen the market shift to the upside. Evidently, there's a lot of room for this market to retrace. So I would argue, if we see, which we have, of course, fundamentally, we've seen the political uncertainty filter out of the South African markets there. I would argue, of course, if we see continued dollar strength over the next month or 2 months, this market is going to just tick up nicely, and there's a lot of room for an appreciation in this currency pair. So again, if we get half of this move, if we get even in around here, that is a fantastic trade. Again, we have seen the floor in the market has held up quite nicely, and again, it's starting to create new price structures again. So this would be number one. This would be our number two, which effectively is our floor and a rebounce off the floor. And number three here, which is just as you can see at a higher level from our first level, number one. Okay, so that is significant. Then what happens next is we get the engulfing candle just above our level, and we may see prices continue. So what I'm suggesting is just to keep an eye out for this market, factor in the news flow, of course, factor in your anticipation perhaps of continued US dollar strength. Again, on the market front, I know that most of you guys are forex traders, but just keep an eye out on the news flow for the return on US dated bonds, of course. So the Treasury bond is the 10-year bond, and yields are now effectively at a 3% level. So just keep an eye out on Bloomberg. If we see that continue, you can simply go to Bloomberg. If you go to Bloomberg Markets and then select fixed income, all your US dated bonds there will be portrayed, and the yield will be given as a percentage like this. If this increases, of course, that will deliver, like say for example, 3.5 in maybe 6 months or 1 year. That will deliver a higher rate of return in US dollars, in US denominated bonds, which will see a very sharp increase in demand, obviously theoretically, for the US dollar. So keep an eye on the news flow, because that would support all of these dollar moves to the upside as we see potential reversals from the US dollar index as well. So very, very interesting moves in the US dollar this particular week here. So what I'll do just to finish off then is to discuss the US dollar index itself. And again, very, very significant price action. Again, I just said at the start of this webinar to focus in on the US dollar assets quite particularly, because there has been a significant change in sentiment for US dollar denominated assets. So again, this is our US dollar index. We have seen this trade down. What I'll do is zoom out and really fill you in on the story of 2017, which was, of course, dollar weakness. We've seen a huge move in dollar weakness. As we've seen dollar weakness, we also seen a growing, of course, US economy. But remember, all of these US shares, well, they are priced in US dollars. So if your dollar starts to depreciate, you can effectively look to inflate those prices, or those prices become cheaper to trade or to buy and own. So effectively, what you're going to see in terms of the relation between equity prices and depreciating currency is, of course, your strength. We've seen it again with Brexit, just like the depreciating currency there of sterling actually rebounded and caused a very strong surge in equity prices. So that was supportive of prices there in 2017. Now, just to focus on the Forex side again, we have the very strong trend to the downside in the US dollar for 2017. More relatively, we've seen the price action hit a bottom and actually create a very well-structured floor in this market with a very long dated trading range. So once these ranges are very, very mature, we know that the more mature these ranges are technically, then the breakout can be more strong to the upside. Effectively, this candle is the last time we've seen the market trade above these prices, which is in and around the 11th of January. Okay, so we're now retracing this whole range. We're seeing a push to the upside. And again, this is significant in terms of pricing the US dollar here with the US dollar index, which is simply a basket of currencies against the US dollar. So now that we see this break with the US dollar index, we see all of these US dollar related currency pairs at an inflection level and start to trade, assuming a relative level of dollar strength. So very, very interesting change of sentiment in the Forex markets this week. Again, to reiterate, dollar strength and New Zealand dollar weakness are the big focus points of the Forex markets this week. So long may that continue. I hope that positions yourself for your trading for the week and gives you more knowledge in approaching the markets, the Forex markets for the week ahead. Just wrapping up the news then for this week. So seeing you guys soon then. Look, from all of us here at Forex Academy, thank you very much for joining us. I do hope you get on well with your day's trading and for the week ahead then. Thank you very much for joining us. We'll see you next time here. Bye for now.